But having said that, I had to pay wealth tax on my ownership here last year. And when you take out salary less than the market standards and you slightly live on your savings, and then you need to pay wealth tax on something that is not still making money, it's not real assets, so to speak. I can't do anything with those. It's the company's money. Then it doesn't make sense.
Welcome to Entrepreneurial Minds Decoded. I'm Flori Nang, and I explore the stories behind the game changers. I'm so happy to have with me today Fredrik Harstad, who is co-founder and CEO of Unlisted, a Norwegian startup. Nice to see you, Fredrik.
Nice to see you, and thanks for having me on your podcast.
Unlisted is about democratizing entrepreneurship and value creation. What does that mean in practical terms?
Yeah, so in terms of, there's two things that I wanted to do when I started the company, and that's, as you said, democratize entrepreneurship. So that's basically helping more founders and more people succeed building startups and companies. And then secondly, it's, as we said, democratizing wealth creation or value creation. So giving basically most of the value creation that happens in the world today happens for those who own stocks. And that was very visible, at least during COVID, how that changed. And it continues to change. And we see also that the biggest value creation is happening in the unlisted market, like the private capital market, where very few people actually have access to. So we're kind of disrupting that market and giving access to more people to own shares in different ways.
What happens if people or more people own shares? How does that change society?
Yeah, hopefully it's kind of creating more equality, right? Because you see that those who basically own more and more, it's basically due to shareholdings, right? So if we can have allow more people actually to own shares, also through the value creation through the workplace, right? So we're distributing that value creation, and from a society point of view or ecosystem, if you like, a startup ecosystem, we've seen that over and over again that money is very often circulated. So then you have other founders or other people starting new companies, and that's why they can leverage that to even get more shares and so on. But I'm not saying that everyone should start a company, but there is that side of it. And for those others, they'll just get the bigger value creation other than just the salary. They'll get the piece of the upside of the work they do.
And when was the moment you realized that this was a problem you wanted to solve?
Yeah, I think I learned that it was a problem for many based on my previous experiences. I've been part of developing a couple of companies before, raising VC capital, PE capital, and kind of spin-off and sales. That's when I realized there's all these things that can go bad and that all these mistakes you can do in a company. And after this, I also started as an angel investor. So I invested in quite a bit of companies and really leaned into the ecosystem and figured out that most companies go through the same stuff. Most companies struggle with the same things. And it's both as an investor and as a founder, these things are very manual, like raising capital, doing all sorts of shareholder agreements, issuing stock options, doing sales. It's all very manual today. So I thought, okay, there are these best practices, so you can apply them in any company. You can digitize this in today in very streamlined manners, and it will save everyone's time, and it will be more effective and more visible for everyone. So that was that. Also, I saw what happened. I saw the trend, as what I just mentioned here about the increasing ownership. And if you look at the market, the private capital market, the value really kind of increases versus public market increases, also over time. But more and more capital is being moved into private market off public market. But then again, it's on the hands of those who already have a lot.
Indeed. How does your product work? If I'm a startup and I want to attract more investors, more diverse investors across the community, how can your product help me?
Yeah. So today, it's most of our clients use the platform to manage their shareholders, right? So register the shareholder book, also issue stock options and restricted stock awards, etc., to employees, board members, and whatnot. And then they manage their shareholder base. What we don't do today is kind of match investors and companies. We have built that, but we took it offline for a good reason, and then probably come back with that again. So obviously all of our clients, we do two things. One is the platform, another is advice and helping them. So we kind of become this sparring partner or advisor, if you may. So a lot of the time we are matching, but then more manually, like helping them point directions of who's investing where and why you should talk to these. If you do that in a more digital manner, then you come into different compliance issues, and that's why we stopped that. But then we'll circle back to that to streamline that even further.
You're a passionate champion for innovation, for entrepreneurs, and for Norway. You sit on the board of an organization called NAST. Can you tell us more about NAST and what it does?
Yeah, I'm happy to do so. So NAST is short for Norwegian Alliance for Startup and Tech. So it's been, I think we were formally organized last year. It's been a movement for a little while where kind of some investors and the top founders in Norway got together and said we need to fix a lot of things in the Norwegian ecosystem and more from a governance point of view. So they joined forces, but then there were more and more interest growing around this organization and the work that was being done. So it was formally formed as a member organization last year, and again, it's as the name says, it's kind of for startup and tech companies, more the typical companies that goes the venture route. So in Norway, there's certain challenges within the ecosystem. So we work with trying to solve those challenges, making it easier for any startup and tech company to start in Norway and scale in Norway. So what we've done now is we have some political pillars where we want to basically make the environment better for companies to thrive in Norway. So we have one which is for tax. So basically, we're working with the government to change the tax regime so it's more sustainable or better, incentivizing startups or capital into startups and funds in Norway. So we're talking about wealth tax and all of that, which I'm guessing we'll talk more about. Another one is capital. In Norway, there's not that a lot or there's a lack of risk capital in Norway at the moment for private companies. So work on different initiatives for increasing that. So that's some examples of things we work with. As I said, we are a member organization. So every year we do have a member call, and people can call in and they can comment and help influence the politics. And throughout the year, we will work with the different organizations and politicians to actually change these things for the better. And we have some good track record for this year already. So I'm very positive about this.
NAST is trying to help entrepreneurs overcome certain structural challenges. There is a wealth tax and an exit tax. How do these taxes impact on innovation?
I think that's, if you look at the election, that was the thing that really split the Norwegian election here.
And this was the election in 2025, correct?
Yeah. So, and it basically split the country. I would say you have people that really don't bother about this, but then most heard about it. And if you look at the debates, a lot of it usually popped up, but it's very misunderstood by most people, the wealth tax. People think like wealth tax, yeah, sure, the rich ones should pay their taxes, and it's hard to disagree on that. But what they don't see is the effect of the wealth tax, and it's counterproductive the way it is working today. So because of this wealth tax, that's a Norwegian thing, a typical Norwegian thing. Not that many European countries do that anymore. But so basically, Norwegian citizens need to pay tax on their wealth. And if you own shares in private companies, that could become an issue, that these are not liquid assets and so on. Having said that, there's a lot of tech companies don't have that big wealth tax value because you don't look at the entire balance, you look at the money they have on the books. But the problem is we really want these big companies to raise a lot of capital and scale from Norway. That's where the issue comes. So if you're basically being taxed on the money that the company has in their bank accounts at the end of the year, those money are not available to you. It's not your money, but it's being calculated into the value that you're being taxed of. So, and that's especially, so it's bad for some investors, but also especially successful founders. And then so if you go and raise like $1 billion, then you basically bankrupt as a founder afterwards. And people think, oh, well, you have $1 billion. No, it's not my money. It's the company's money, and the board says what to do with them. I don't take out that big salary and so on, but you still need to pay that tax as a person based on your private assets. So that's where there's a gap. That's the main thing, and it bleeds over then to the exit tax, right? So I think the exit tax was implemented, I don't know, a couple of years ago now, and it's basically, if you leave Norway, it was changed for the slight better, but if you leave Norway, the value that you created in Norway will have to be taxed. And that value could be paper value, like it could be the value in your company that you started. So if you started a company, you raised a lot of money at a big valuation, they look at that valuation when you leave the country and say, that's the value that you need to pay tax on. And no one has that money, or most founders don't anyway. So that's a problem by itself. And I think a problem that leads to is we need more talented people moving into Norway. But when we have a system like that, who want to move to Norway for a short period of time, and because when they leave again with equity, they know they're going to be taxed a lot. So it's kind of a blocker for recruiting talent to Norway, unfortunately.
So if you're a founder and you raise $100 million and you own 50% of the company, so there's $100 million sitting on your balance sheet in your bank account, and the government says you're worth 50 million. Is that how the wealth tax works?
It's not one-to-one. So there's something called wealth value, I guess is the correct translation. So they'll calculate that based on a different equation. So it will basically look at the value in the company. It will deduct kind of the typical value of your tech and so on. But obviously the money in your bank account, that's kind of one-to-one. And then you get a price per share, and you calculate that. So if you have, you can always say that, like, if you have all that cash on the bank account and you divide on ownership, it's not far from the truth. But again, a lot of tech companies, if they don't have a lot of cash on hand, they will be close to zero. But having said that, like, I had to pay wealth tax on my ownership here last year, and when you take out salary less than the market standards, and you kind of slightly live on your savings, and then you need to pay wealth tax on something that's kind of not still making money, it's not real assets, so to speak, I can't do anything with those, it's the company's money, then it doesn't make sense, right? So there's it's just, there's something off with that.
So how do founders deal with that? How do they pay the wealth tax if they don't have savings to fall back on?
If you look at traditional founders, if you don't go out and raise a lot of capital, a lot of the time it doesn't matter unless you have kind of other real assets, like hard assets, then you would have to pay. And that's an issue. So there's examples of people here driving to the tax authority and offloading big chains. That this is my value. It's tied up to the chains, but you want the value, so here you go. So that's more of a token of showing what they think about this. But what founders need to do is, we have some clients that raised a lot of capital. And what they've done is they waited till after the new year, because it's the value you have in the bank account by the 1st of December every year. So they would agree on everything, but they will do this whole transition maybe after the year, so they can burn through a lot of the cash before you need to report the next one. So there's kind of workarounds, but it's just silly that you need to do those workarounds. And then we had those founders that basically moved abroad, and they did that before the exit tax. And then we have other people raising, for instance, through safes initially, or slip in Norway, just so the paper value doesn't go up. Obviously, that's an issue if the money is in the bank from a wealth perspective. But what you can do then is you can actually, before you get proper validation that the company is really successful, it allows you to move out of Norway before you convert this into equity or do capital raise, where you have a valuation, so that the exit tax can't be calculated from a big valuation. So that's a different way that people get around this. So it's very sad.
The exit tax must be a bit controversial.
Yeah.
I'm not sure what the exit tax is. A certain amount of a paper valuation, which you as a founder don't actually have. And what is the work around that?
Yeah, it is what I mentioned there before. Like if you're aware of this, and I've spoken to some founders that have been, they raised then money on the safe and slip, not to get that paper value. And then once they saw they got traction, they moved out of Norway before they converted these convertibles to a proper valuation where you have a paper value. So that's one workaround. Others are simply stuck. Something great, move out of Norway. I don't think you need to. If it would be easier, sure. Having said that, I think it would be easier for many countries, or that would be the same in many countries. If you go closer to capital sources, things could potentially be easier. So we're not making it easy for ourselves, but you can definitely succeed in Norway. But there's all these stories that also says it might be easier to succeed other places as well. The good thing in Norway, we have a big safety net, right? So it's kind of easy and less risky to start a business, but it's harder to scale a business from Norway.
There seems to be a lot of support actually in Norway at an early stage. And it's, Norway's an amazing country. It's really sad that founders feel that they need or they might need to go abroad. In the recent Winter Olympics, Norway topped the medal tables, as always. Incredibly impressive for a small country. And Norway punches above its weight in most sport. Norway has put in really, really good systems in supporting athletes. So what's holding back Norwegian startups today, apart from the wealth tax and the exit tax? What can Norway do better to support startups?
Yeah. Oh, where should I start? Yeah, we had this discussion actually, or the same analogy a month ago. If the whole startup ecosystem were kind of a Olympics game, we would be lost, right? And then, as you said, we're really successful when we put our efforts in, and that's been the thing. I think there's different reasons behind this. For one, we haven't had to be honest. Like for good and bad, we have had oil and gas, which has been awesome for the entire nation and all citizens. That will continue to be the driving force. Like it's 50% of our export values, etc. So that's what we call. It's been one of those sleeping pillows, is what we say. It's been easy for us, right? So that also, there's a lot of talent goes in there, and we've been kind of fat and lazy, to be honest. So if you look to other ecosystems, they haven't had that. So they started other big tech companies, and those tech companies became a lot of different founders and management that went and start their company, and there's all this capital then floating around, and it's just developed itself. It grows arms and legs. We never had that here in Norway, and things really started in the venture space. It was Startup Lab and that was, I don't know, 12, 15 years ago. So it's a very young ecosystem. So we haven't had all these big successes yet that has all these spin-offs and so on. So there's that. And because of that, we never really kind of fixed the incentive schemes or capital. No one really worked with that. And then we also have janteloven in Norway. That might also earn a statement in this. So people don't like to stick out or be better than others. You're not allowed to be better than others in Norway type thing. So being founders and such, that's all about like sticking your head out and try to be better than others in a way.
For the non-Scandinavian listeners who may not understand what janteloven is, could you explain it briefly?
Yeah, I'm not sure what kind of the correct definition is, but I think there's all a set of rules like you're not better than others, you shouldn't act better than others, and it's more like we're all equal. So people tread more carefully. For those who stick their head out, they might be shut down.
Do you think that has had a big impact on people going and being?
I don't know. I don't think it has a big impact. It's more a cultural thing, right? And we don't like to take a lot of risk. We're a bit more careful. And as I said, we've been fat and happy, lazy because of oil and gas. A lot of, especially depends on where you are in Norway, but we had a good economy. So we really never had to start this before.
And how do you think as NAST or you as an entrepreneur can help change that mindset?
We actually discussed that today. So I'm working on the new capital strategy for NAST. And one of the things we discussed, this kind of fresh, and I can communicate openly about it because it's something that we stand behind. What we do see in Norway is like probably has a flavor. It's flavored by this janteloven probably as well. Like newspapers, if the way they write about the capital market or investments in private companies, and a lot of politicians are negative to it. So, and they look at all the bad stories, but never talk about the good stories. So, but there are a lot of good stories out there, and more, and we do have a wealth or a pension fund in Norway that actually start investing in private companies, but they don't really get that good positive attention they should get. So one of the things that we said we'll do is we'll be that organization that helps opens other people's eyes and talk positive about this and give them facts, like the positive facts, not only the bad stories about who got bankrupt. That's part of the game, right? So that's part of the venture game. If that's why you build a portfolio. Most will fail, but those who succeed, they really succeed, and then you have all these other positive effects around it. It's the name of the game. It's not flawed, but there's a lack of understanding of those things. So trying to more talk positive about those things and educate the population, I think it's smart.
There's also a really interesting book called The Country That Became Too Rich that came out last year. It is about Norway and the oil and gas money. And a very high-level summary, it's saying that it has sucked up a lot of the resources, may not have encouraged innovation or people to take risk because they don't need to.
That's very true. I've read the book. I was one of the one that received one of the first copies. So yeah, it was really interesting to read. It brings in different perspectives as well, but I think it really proves my point.
So like many in Norway, you were an oil and gas man. You have 4 kids and you were in a well-paying job. So it must have taken a lot of convincing of your wife maybe,
Yeah.
to leave your job and go into uncertainty being a founder.
Yeah.
Why did you transition into the startup world?
Yeah, well, first of all, why oil and gas? That's because we're born and raised in Stavanger. Like this is, I think it's fair to say, it's almost the oil and gas capital of Europe, at least the Nordics. So, and then I realized I just had a passion for something bigger. Like I wanted to make an impact. I saw this problem. I like working with this, and I really believed that we could make a positive impact in the world. So for me, it was driven by a bigger purpose that I saw this, and I also see that we do need a change in Norway. Hopefully, we'll make good money in oil and gas. It's more sustainable than other oil and gas productions around the world. But we need to make something else after oil and gas. And I didn't see a lot of people taking the lead on this. I'm not saying that I should take a lead on it, but at least I could make my efforts. So, and I really believe that an organization or a company is a really good vessel for change, if I can put it that way, right? Like you organize a lot of people around something, you put capital and work, and you can actually go and build something. You can change the world. So I thought I could do that for the stuff that I believe in. At the same time, I can help other people do the same for the stuff they believe in. So I hope by taking this move, it could be almost like a catalyst for others to do it, just because we're making it easier for them to do so. And I thought this was so powerful, and I thought, okay, that's really something I really like to do. And it did take a lot of conviction for myself, but also eventually I had my wife pushing me and saying, now you just need to go and do it, which that's when I resigned and went all in.
What did your parents or the environment that you grew up in teach you about money and work?
I don't know. Money was never a big topic at our place, but work ethics chipping in was, right? So I was working with my dad in his business since I was probably 13, earning my own money. But I think what I take from that is kind of more training that work ethic, understanding that it's okay to work, and if you do work, you get benefits from that. So.
Do you think there's a generational difference in that you maybe, don't want to guess your age, but maybe you had parents who remembered when Norway wasn't a wealthy country, but the younger people today, they have lost that connection perhaps. And because money comes easy, selling oil and gas, that there is a disconnect between work and having a comfortable life. Do you think that's a fair thing to say, or?
Yeah, I do think so. And I don't think they even realize it. It's part of it, right? I think Norway's been an upward trajectory for a lot of time, like decade after decade after decade. And then we had, it started before the oil and gas really, and then after the oil and gas, it really changed, right? People became, I don't know, wealthy, and so to say. And then it started changing in quietly in 2014. That's when I first realized this, because that was the first, I would say, an oil and gas hit in Norway. And we've actually had a lot of people unemployed back in Stavanger then. And that's when you saw the first wave of startups and so on. But then it kind of went up again from there in oil and gas. But the economy never really got back on the same track. Most people think so, probably, and we don't talk much about it. The book actually addressed this as well. There was some change there that happened, and the productivity has been going down. And I think you're right. I think the younger population, they have a bit of a disconnect. Myself, I've always only been in a kind of upward trajectory as well, with the exception of this 2014 bump. But other than that, we always had it easy, I think, in Norway compared to a lot of other countries. And that matters.
How do you bring up your children with that perspective? What sort of values are you imparting to them?
Yeah, except from the usual one, being kind and all that. So to me, it's like making them confident and self, I don't know, independent is the word I'm looking for. Independent, do their own thinking and good work ethics, whatever you want to do. It's not so. And having initiatives, like if you take initiatives and have your work ethics, and then I think you can come very far. Whatever you can choose, whatever direction that you want, as long as you're happy and be aware of the consequences of the choices you're taking. But then again, back to independence and yeah.
Do you think growing up in Norway influenced your view on ownership and fairness, which is maybe what also led you to start your company?
I don't know. I don't really think so, given that most people in Norway don't really talk about this that much, right? It's not a thing, because we all in Norway there it is this equality, more or less. Like we don't have those that earns very little and those that earns very well. You always have them, but you know, on a general basis, it's kind of we're all within a acceptable bracket. So you don't really have to own something to gain your okay salary and have a decent life and so on. So I don't really think that matters. But the whole wealth tax and all of that, that's the Norwegian culture. It's that equality thing, and I'm all for equality, and I'm for what they're trying to achieve with the wealth tax. But when I see the effect is counterintuitive, then you should also take action. But that's definitely, I think, Norwegian culture, which should be the same. Everyone should have the same.
What did you have to unlearn when you entered the startup world, coming from a very corporate environment?
Things goes fast in the startup world, right? And it's designed in a way that you should test and experiment and fail and quickly and move forward. And I think letting go of ideas and test more quickly, and that's a really startup thing. That's also really hard, especially if you're set to what you want to achieve. There's different ways to get there. But I think for people starting in startup ecosystem, being comfortable with the unknown and still just betting on something, gutting on without everything being perfect and just go for it. That's something that I think most people need to enforce themselves, really, especially now in the world of AI. But that might also be their shortcomings, and that's something that's going to kill them at the end if they do. So that's a balance. But I think there's something there.
What's the hardest decision you've had to make as a founder?
Yeah, I can't recall that one big moment, hard decision. But obviously, if you do take capital from external sources like investor capital, you accept that you're on track, right? You then follow into this thing. You're probably going to take more capital. You'll grow quickly. So that's one of those decision points that's at least impact the rest of your company journey. To us, building what we're building, I can't see a way around doing that. So that was the right thing for us to do. Then the question is always, how quick should you grow versus how big good fundamentals should you build, going back to the other, what you need to unlearn and what not, and where you need to do some bets. there's always, you take a gazillion types of bets here, and then one influence the other. So there's always, you can go back and say, I should do that differently, and so on. If I were to do it again, we would probably position ourselves slightly different from at the start, and go and try to raise bigger capital from external shareholders abroad, and focus more on certain growth metrics before kind of profitability, and selling more on the vision versus the smaller pieces. So that's something we would probably do if we start over again.
To build on that, you would have gone overseas to get capital.
Yeah.
And why is that?
I think so if you were to go in the US, if you see that if you do have a thesis of a new business that can become really big, given, of course, you need to do the execution, there's some risk, and you need to identify those and have a good plan. But then if you see that if you, with sufficient capital, you can become a market leader and you can really change how things is being done. In Norway, there's not the same risk appetite for that, right? It's so historically you built companies more kind of sustainable with cash over cash. We have this, where I'm come from in Stavanger, in Jæren, the area. It's more like brick by brick mentality. Like you earn some money, you spend those money to earn more money, and that's how you build a business. So in venture space, or in tech companies, if you wanna take a big position, the rule book is slightly different. Well, it's very different, really. But one doesn't rule out the other, but it's harder.
How does having taken domestic capital prevent you or make it more difficult to get foreign capital into your startup?
I wouldn't say it makes it more difficult, but you're in different. With the capital comes certain expectations, and dependent on how much capital you have, you define some milestones that you want to achieve. You might do that before. You usually do that before you raise the capital, and then as you get more involved with the investors, then they get more and more firm. So it's more what are the bets that you're going for? What is the milestones that you want to achieve? So, and I think if you talk to, you can't kind of put everyone in the same bucket here, but typically in Norway they might want to see other milestones than if you go for more investors with bigger risk appetite, but then also bigger capital source, right? So those two things goes hand in hand.
How much power should you give as a founder to early investors? Because you talk about milestones. Is that actually something that's in your investment agreement?
There's no rule book for this. Obviously, like the power should be with the founding team initially, and then it moves more and more over to the board as the company matures and you have the governance structure in place, right? And then obviously also the shareholders, but then that's more if you have bigger shareholders coming in, deploying more capital, and then you typically do that together, right? Because this is a long-term time journey, and you need to see eye to eye with those investors, and typically they'll only get involved if you share the same vision, right? And how to get there. But then the story starts, and no story is a straight arrow. Like you have this, and depends on how deep their pockets are and what other happens. Things might change as you go along. So there's no single rule book here, but I think it's important that those that run the company has that flexibility, and you need at least an early stage. It's innovation, right? Most startups do innovation, and then you need to have the finger on the pulse, and you need to adapt to the market as you go. And you need to be, only the founders or the management team are close enough to actually see that. So, yeah.
Absolutely, because you're in the trenches. What's the best advice you've had from an investor?
It's hard to say. There's not one that sticks out as the best. Like, and it really depends if it's are you operational or are you strategic? Because we've gotten a lot of good advice on different levels. So it's we haven't had one that's been a typical game changer, but most investors, typically say keep focused, right? That's a good one, and that's also hard in many ways. Sometimes you don't, as founders, as when you kind of seek for this product market fit, part of that is experiments. So then what's focus? Like you need to do what's working, but you also need to do, maybe there's a highway just next to you. But that's experiments. So that focus thing is a bit hard sometimes. It's like it's almost like when you raise kids, it's always busy, and you think it's about enjoying the time with them, and suddenly the time passes, and like where did all the time go, and did you spend enough time, like all of that. But same with that focus. You don't know until it's gone, or afterwards that did you have the right focus or not, because then you also had the answers. So that's a hard one.
What is one thing that founders waste too much time on?
There's one definite one, right? I think those founders that's going that capital route, especially now, they too much founders waste too much time on raising capital. So if you start raising capital and you're building something and you plan to have another round, then at one point you'll probably go and fundraise. And a lot of the times things take longer than you expect. Milestones might reach, things might cost more than you think. So you might not always reach milestones, but you still need to go out and fundraise. For those that really crushes it and really get growth, it's easy for them to take the capital. But the others, not so much, especially these days. So I've seen that so many times. We had a discussion last week with a capital course I'm part of now. So we can see it with some of our clients, like you can see the attraction. And if you look at that traction and a graph, you can look at it and say, this is where you fundraised, this is where you fundraised, because you have all the dip, everything is crashing. Your metrics, your sales numbers, like your growth, everything goes downwards because you're not adding value. You go out to try to get capital to bring that into adding value again. So unfortunately the name of the game. And that's part of the thing that we want to fix as well for founders, so they can spend less time on those things and more time on actually building value.
What do you do to disconnect from work?
I'm a soccer coach for both my two youngest kids. So that gives me a lot of quality time with them, and that's also helped me disconnect. But that's busy during weekdays. I think if you're a parent and involve yourself in that. I think other than that, we have a cabin. So when we go to the cabin during weekends, especially during kind of the good times in Norway, like the spring, summertime, that's really when I can relax at the cabin. That's the best quality time we have as a family.
That's very typically Norwegian to have a cabin. Is your cabin in the mountains or by the water?
By
or
the
both?
Water. Yeah, no, both. But actually, there's a lot of mountains in Norway, right? So if we look out, we have this beach or the water just border to the cabin, and if you look around, there's a mountain in every direction. So it's both.
What does success look like for you in 10 years? You've just opened an office in Copenhagen and you're in Norway as well. Where do you see the business going in the long term?
We built a global first platform, right? So we have big ambitions. So obviously, I'd like us to see that we take that position. Having said that, like for us to do so, we really need to scale. Then it's customer acquisition, basically. So that also requires a lot of capital. But that's where we want to go. We really want to take a big position globally. So first it's going to be the Nordics and then expand from there. And hopefully also kind of influence Europe's race against the US and China when it comes to innovation with this new EU Inc. So that's something we would like to position ourselves for. So building out the platform and really have a lot of users and streamlining the things that we talked about so more people can own equity and get part of equity and more companies succeed because of us. That'd be nice.
What is one thing you'd do differently if you had to start all over again?
Now the world has changed, right? So now as being an AI first company, I think that's something that we do. We're now taking that shift. Other than that, I think thinking and executing bigger from day one. That's probably the big thing, like going all in on some bigger bets for us, again, having more capital initially, slightly different structure from the start. That would probably be it.
Fredrik, thank you so much for this really candid conversation. I really enjoyed it.
Thanks, I did too. So thanks for having me.